Real estate is slow, expensive, and taxed forever, whereas Bitcoin is scarce, liquid, and compounding at a pace that housing just can't touch. Today, I'm going to prove using hard numbers why Bitcoin outperforms real estate as an investment. Over a 10-year horizon, Bitcoin's compounded returns, liquidity profile, and friction costs dominate US residential real estate, even before taxes and maintenance tilt the field even further in Bitcoin's favor. So let's begin with the data. Over the past decade, the price increased by roughly 41,000%, turning a $1,000 allocation into over $400,000. Compare that to real estate. The S&P CoreLogic Case-Shiller National Index is up less than 2% this year, meaning it actually rose lower than the rate of price inflation. Said differently, if you bought a home last year and sold it today after factoring in taxes, you would have had less money when adjusted for inflation. So you can start to see why real estate as an investment asset doesn't stack up to the other higher growth options available to you. Of course, real estate has tremendous utility, and we're going to get into that. But as an investment, there are far too many alternatives that are beating it by orders of magnitude. Now, people love to say that real estate pays them, right? The yield that they generate from rent, but that yield gets eaten alive by carry. The average US multifamily cap rate in 2025 is 5.6%, which is the highest in nearly a decade, but below current mortgage rates. The 30-year fixed rate hovers near 6.8% today, and debt service alone can erase any positive yield. As far as maintenance is concerned, you can expect to pay 1 to 4% of property value annually. So on a $500,000 home, for instance, that's $5,000 to $20,000 per year. And factoring in property taxes, that's another half a percentage point to 2% of assessed value annually. So after debt, taxes, insurance, and maintenance, most rental income barely outpaces cash in a savings account. Now let's get into friction and liquidity. Selling a home takes months. Everybody knows this. Median days on the market currently sit around 60 plus days, with that rising in recent months, and agents take 5 to 6% of the sales price in commissions. Whereas Bitcoin trades 24/7 with global liquidity, and settlement takes minutes. That liquidity is a hidden premium, and Bitcoin captures nearly all of it relative to real estate. If you want to get out, it takes months in real estate, whereas with Bitcoin, you can settle nearly instantaneously and obtain cash. Now let's talk about scarcity. Bitcoin supply is mathematically capped at 21 million units. After the April 2024 halving, only 450 Bitcoin per day are mined, which is down from 900. And Bitcoin's entire terminal supply, the total amount that will ever exist, will be fully exhausted before the year 2140. Meanwhile, the US keeps building. Over 460,000 multifamily units were delivered in 2024 alone, with another record year being set for 2025. Buildings can always be torn down and rebuilt, but Bitcoin's issuance only falls. Now let's talk about risks and drawdowns. Bitcoin is volatile, drawdowns happen, and they happen historically quite often. But investors are compensated with a massive long-term compounded annual growth rate. The longer you hold, that time horizon is awarded. And real estate may feel stable, but based on what we've discussed so far in this video, its risks are hidden in factors that are not visible in the price, such as property taxes, maintenance inflation, insurance premium spikes, and illiquidity. You can't sell a bathroom remodel in order to cover a bill, for instance, but with Bitcoin, you can. And property tax is forever. Every single year you pay just to own what's already yours. But Bitcoin doesn't have property tax. It just has potential capital gains when you sell. Owning Bitcoin costs nothing but your patience and your security. Real estate returns depend on zip code luck, zoning, local politics, insurance markets, and those things are subject to change over time, whereas Bitcoin is global and non-sovereign. So its liquid capital cannot be trapped by geography. Your wealth can move at the speed of light, not just the pace of escrow. Now, fundamentally, this is what it all boils down to. A home is a consumption asset. It serves as shelter. Its utility is irreplaceable. Its value goes far and away beyond what it might be on Zillow. But as an investment, it's losing its edge. And that's a perfect transition to what's underway right now and what's happening next. Real estate is being demonetized. It's losing value relative to harder assets like Bitcoin and other high-growth investment assets. You can see this in the data. In 2014, the average US home cost about 664 Bitcoin, but by 2024, that same home cost just 6 Bitcoin. And over the last 6 years alone, Bitcoin has appreciated 14 times over relative to US real estate. So real estate isn't collapsing. Of course, in dollar terms, its price is rising, and chances are it's going to continue to rise. But Bitcoin is repricing money itself. And when you replace the dollar with Bitcoin in your denominator, you can see the results for yourself. As the harder monetary standard emerges, assets like property are being devalued downward relative to it. Now let's talk about the money printer. Global credit creation is endless. Central banks keep expanding balance sheets and money supply, but there's one asset with a fixed terminal supply, and that's Bitcoin. When liquidity floods markets, whether through quantitative easing, stimulus, or massive fiscal deficits that are run by the US Treasury every single year, some of that excess capital looks for scarce assets. Historically, that meant real estate, equities, or gold, and now, increasingly, it's Bitcoin. Arthur Hayes calls Bitcoin the world's liquidity barometer. It's where speculative capital goes when the system creates too much money. As each credit cycle expands, Bitcoin absorbs more of it. And that's why Bitcoin is rising, not just in dollars, but relative to everything else. And this is where Horizon comes in. It's a bridge between the old and the new paradigms. If you're a homeowner, your house has trapped equity. It's wealth that's sitting still, and as mentioned in this video, it's eroding value relative to Bitcoin. Horizon lets you unlock that equity and convert it to Bitcoin without taking on new debt, selling your home, or adding additional monthly payments. You stay in your home and you just make your capital work harder. So this is how Horizon addresses each of these real estate pain points. Number one that we discussed being illiquidity. Horizon solves it by allowing you to unlock your home equity without selling your property or taking out a loan in order to invest in potentially higher growing assets like Bitcoin. Another pain point is high carry costs. If you shift some of your wealth from tax-heavy, high-maintenance property into zero-carry Bitcoin, then ultimately you can allow Bitcoin to do the work while your property takes in cash flow, helping to offset some of those perpetually increasing costs associated with your property. The next pain point is underperformance. Horizon solves it by converting static equity into Bitcoin exposure, an asset that is compounded historically far faster than homes. And the final pain point is concentration risk. And Horizon allows you to diversify away from local real estate risk into a global monetary network that has grown by an average of 50% per year over the last 5 years. Now, of course, you know the features and benefits of Horizon if you followed us for quite some time, but for those who are new here are the features and benefits right next to me. There are no loans, no interest or monthly payments, and you retain full ownership of your home. The Bitcoin that you purchase is fully 100% owned by you, and Horizon takes no share in the upside. Now, of course, the benefits to this are you have access to that liquidity that's been trapped in your home, and over the last year, chances are it may have been beaten by price inflation. So you're redirecting part of your capital into a fixed supply asset, and it gives you optionality. You participate in Bitcoin's rise while maintaining homeownership, and finally gives you freedom. You escape the property tax treadmill while keeping your roof and ultimately allowing part of your home's equity to move into an asset that has a much better historical track record of long-term growth. So in closing, the story is simple. Real estate is stagnant wealth, whereas Bitcoin is accelerating wealth. For decades, property was the cornerstone of financial security, but now more than ever, as investing is being democratized and more assets are emerging that prove to be a better store of value over a long time, real estate is deflating back to its utility value. Houses should be homes, but since 1971, when we departed the gold standard, homes have become financial assets. Now capital is migrating out of homes and back into financial assets, and Horizon is there to help you do the same. If you're sitting on a home equity, Horizon gives you the bridge, a way to join this historic shift without selling your home. Because the future of wealth won't be measured in square feet, it will be measured in Bitcoin. That's all for today's video. Thank you so much for watching. If you're interested in learning more, go to joinhorizon.com to see if you qualify or just scan the QR code right there. That's all for today's video. Thank you so much for watching, and I'll talk to you soon.